$250,000 in tech dividend income could vanish by Q2 2025, and your stocks are hiding the margin pressure that earnings calls will expose. Here's what you don't know yet. Semiconductor shortage plus tariff stacking plus AI infrastructure capex are collapsing gross margins across consumer electronics at the fastest rate since 2011. When margins contract 300-500 basis points, companies don't protect dividends. They cut payout ratios by 40-60% within 1 or 2 quarters to preserve cash. For $250K position yielding 3%, that's $2,500 to $3,750 in annual income gone, right when you're entering your final pre-retirement earning years. Most dividend investors believe tech companies will shield shareholder returns no matter what. That's the wrong bet. Here's the proof. Apple cut its dividend growth rate from 25% year over year to single digits between 2011 and 2013 during the last supply chain disruption. The company's 10K filings from that period show gross margins compressed by 470 basis points in fiscal 2013, and the dividend payout ratio dropped from 32% to 27% within 18 months. Not a cut in absolute dollars, but a ceiling that froze payouts while earnings recovered. Best Buy faced the same pattern in 2012. Gross margins fell 310 basis points, and the company suspended its dividend entirely for 6 quarters. Now look at what's happening right now. BLS Producer Price Index data for semiconductors and electronics components shows a 23% cost increase over the last 12 months. U.S. tariffs on Chinese electronics jumped from 12.5% to 25% effective October 2024, stacking on top of existing duties. Intel, TSMC suppliers, and component manufacturers are passing 40-60% of these costs directly to consumer electronics OEM. Apple's gross margin guidance for Q1 2025 is already 200 basis points below the 5-year average. Best Buy's latest 10Q shows component costs rose 18% quarter over quarter, while retail prices remained flat. A margin squeeze in real time. Here's the hidden detail. When gross margins fall below 37-38% for consumer electronics companies, dividend payout ratios historically collapse by 40-60% within the following 2 quarters. Apple's current margin forecast, 46.2%. Best Buy's, 22.8%. Both are still above the danger zone, but the trajectory is downward. In Q4 2024 earnings will reveal whether management is cutting guidance. The earnings metric you need to watch is gross margin percentage, not earnings per share, not revenue growth. EPS can be held flat through buyback reduction, but gross margin is the canary. If Apple's gross margin guidance falls to 44% or below in January earnings, expect the dividend payout ratio cut announced within 90 days. If Best Buy's gross margin dips below 22%, the dividend is at elevated risk within 2 quarters. Tariff stacking compounds this. If incoming tariffs move from 25% to 40% on Chinese goods in early 2025, as some administration proposals suggest, component costs spike another 15-20%, forcing cascading margin compression that even price increases can't offset. Companies will cut capex, freeze hiring, and reduce dividends before they risk covenant breaches on debt. For dividend investors, the action is clear. Before earnings season opens in mid-January, pull the latest 10Q for each holding and calculate current gross margin percentage. Compare it to the 5-year average. If the spread is more than 300 basis points below average, that position is at elevated dividend cut risk. Consider trimming the position by 25-40% before guidance is announced. You'll lock in current yield before the cut hits. If you want the full margin threshold spreadsheet and the warning sign checklist, the deep version is in my book, Market Cycles Decoded. Link in the description. Here's the bottom line. Tariff stacking and semiconductor shortage don't care about your retirement timeline. They compress margins, and margins trigger dividend cuts. Most investors won't see the warning until February earnings when it's too late to adjust. You have 6 weeks to act. If this changed your view on your tech holdings, hit subscribe. I'm covering the 2025 tariff cascade sector by sector next week, dropping Wednesday. Ring the bell so you don't miss it. What's the biggest dividend holding in your portfolio right now? Comment below. Let's flag the risk together. Markets reward the patient and the prepared.